Angela, I wanted to start with Alphabet in particular, which is showing some weakness. You've got a strong buy and a $3,400 price target. We are a long way from there. What do you expect them to report today?
Yeah, listen, thanks, Sarah. Overall, when I think of big tech here, overall, I mean, listen, this isn't going to be kind of the beat and raise type quarters like we've seen in the last 3 years. We've got probably the most headwinds we've seen in years now, right? But the hope here is valuation has really discounted many of those challenges, whether it be consumer issues, whether it be supply constraints, Russia, Ukraine, a stronger dollar. I mean, tons of uncertainties out there. But at the end of the day, as far as Alphabet is concerned, I mean, it's all going to be about the search business. It's going to be about YouTube, and we think it's going to be about the cloud. And we're expecting fairly good results out of all three of them. In terms of the search side of things, we're looking at 20% plus growth. On the cloud side of things, I think that's going to be really important as long as we can see 35 to 40% growth on that side of things. I think overall the quarter holds up very well. But again, it's all going to come down now to Q2 guidance on the second half of the year. And as far as the downside potential, I think to consensus estimates, I'd say maybe max about 3 to 5% to the downside. And given that, coupled with the valuation of about 17 and a half times earnings to our 23 estimate, I feel like it's a bit overdone here.
The problem, Angelo, is that all those headwinds that you mentioned that have been hurting the stock and all of stocks, rising dollar, guess what? It's still strengthening and still making new highs going back to 2020. The war in Ukraine still happening. The weakness in the economy starting to come. So my question is, what sort of insulation does Alphabet's ad business have to these kind of cyclical and macro factors which don't appear to be getting better? Because that's going to be the key, right, for guidance.
Yeah, no, absolutely. Listen, I think as far as Alphabet is concerned, I mean, typically most marketers out there, the last thing they'll usually cut is kind of the search side of things. That typically holds up much better than other aspects of kind of the ad space. And I think maybe that's why, Alphabet is kind of seen as a bellwether here relative to other ad-oriented or ad-driven type of companies out there. That being said, I mean, there's clearly a lot more tied to Alphabet here rather than just kind of the search side of things. Again, we do see good results on the YouTube side of things as well as the cloud side of things. Decelerating growth, but nonetheless, I think the secular tailwinds there still remain intact despite some of the concerns that we kind of highlighted.
If you like Alphabet as sort of a value play, that it's been beaten down, what about Meta? You're on hold, but your price target is $294 and the stock is trading, I don't know, 182 or so. So do you consider it also a good deal?
So listen, I think as far as Meta is concerned, to us, it's a bit of a value trap. I mean, we're not as bullish on that side of things. Our concern definitely here is more on the user side of things, whether or not that can continue to grow. I mean, currently the street looking at about 2 to 3% growth here for Q1 and Q2. I don't know if you're there. I think the bigger concern here is, do we potentially see negative numbers, especially as we kind of go into Q2 on a year-over-year basis? If we do, I think all of a sudden the Meta story looks very similar in many respects to what we're seeing out of the Netflix story, whereas you kind of have significantly higher OPEX numbers, significantly higher CapEx spend, amid a period where those ad dollars aren't kind of offsetting kind of the growth trajectory or the investments that they're looking to make.
You also cover Apple, which has been a little bit more resilient, and it reports on Thursday. What do you expect there, given especially some of the new concerns this week about China and expanding lockdowns?
So, as far as the March quarter is concerned, we do expect them to beat overall. I mean, as far as the iPhone side of things, you look at smartphones on a year-over-year basis, probably dropped about 10% year-over-year, more pronounced on the China side of things. So it would be interesting to kind of see what they have to say about China. But at the end of the day, the market share gains has really been phenomenal for Apple. You're talking about 15% market share a year ago, about 18% here in Q1 of this year. So, overall, the market share gains, we think, offset some of the declines in the broader market. But I think as far as Apple's concerned, the key is going to be services. We do see about 17% growth on the services side of things, and that's really the crux of the growth story for Apple. So as long as that holds up, we like this story. And then on the capital allocation strategy, we're looking for $100 billion and a 7% dividend hike. So, probably another thing that investors are hanging their hat on right now.